Welcome to the deep dive. Today we're really tearing into the Q3 and the first 9 months of 2025 results for one of the big pharma players. And the headline, I suppose, from their own material is this phrase, unprecedented pipeline delivery.
Yeah, and that phrase can sometimes sound like, well, just hype, can't it? But honestly, when you dig into the actual data, it kind of holds up.
Yeah.
Our mission for you today isn't just, reading out numbers. It's about figuring out what really drove that strong commercial performance.
And crucially, looking at those specific clinical breakthroughs, the phase 3 stuff that seem to be reshaping how diseases are treated and promising that future growth towards 2030.
Exactly. So let's ground ourselves first. The 9 months numbers, total revenue up 11% to about $43.2 billion. Core earnings per share jumped 15% to $7.04.
And you mentioned grounding ourselves. These figures are at constant exchange rates, CER. Maybe just a quick word on why that's important.
Right. Yeah, CER is key. For a massive global company like this, currencies are bouncing around all the time. Using CER kind of strips out that noise so you see the actual underlying business health, the organic growth. And speaking of underlying strength, that pipeline point. I mean, the scale is pretty remarkable. Since the end of last fiscal year, they've bagged 31 new approvals in key markets.
31. Wow.
Yeah, and maybe even more impressive, 16 positive phase 3 readouts. Just think about that volume of late-stage success. That's really setting the stage.
Okay, so that leadership enthusiasm, it sounds like it's genuinely rooted in the science then. But let's follow the money. Where did that $43 billion actually come from? Geographically, therapeutically?
Oncology is just, it's the powerhouse, no question. It pulls in 43% of all their revenue, and it grew a hefty 16%, just dominating.
43% from oncology alone.
Okay, then you've got the biopharmaceutical side, CVRM, that's cardiovascular, renal, and metabolism, that's about 23% of revenue, grew 5%. Rare disease, which is the election part, holds 16% and grew 6%. And then respiratory and immunology, R&I, that's 15% of the pie. But look at the growth, up 13%. So some real acceleration there, too.
So a decent mix overall, but yeah, cancer is clearly paying the bills and funding the future pipeline, it seems, geographically. The U.S. is still king.
Yeah, U.S. is the biggest single market, 43% of total revenue. But what caught my eye was the emerging markets, excluding China. They showed the highest percentage growth.
Oh, interesting. How much?
Up 21% CER. That's, really strong double-digit growth outside their traditional strongholds. Shows real global reach.
And I guess all this feeds into their confidence for the full year.
Absolutely. They were very clear, reaffirmed their guidance for FY 2025, still expecting total revenue to be up by a high single-digit percentage and core EPS up by a low double-digit percentage. They're betting big these clinical wins will deliver.
Right. Let's pivot to those clinical wins then. The science bit that underpins all this confidence and really sets that stage for 2030 you mentioned. We have to start with oncology, don't we? Specifically the ADCs, antibody-drug conjugates. And in HER2, up 38% in 9 months. That's huge.
It's not just the growth number, it's how it's growing. And HER2 is basically rewriting the rulebook for HER2 positive breast cancer, the key strategy, moving into much earlier stages of the disease.
Okay, and we saw some massive phase 3 data drops in Q3 supporting that shift. Let's talk DESTINY-Breast05 first. What did that show for those high-risk early-stage patients?
Right, DESTINY-Breast05. This is potentially practice-changing. It looked at patients after initial chemo, so post-neoadjuvant, who still had residual disease, high-risk group. And the data. In HER2 slashed the risk of the cancer coming back invasively or death by an incredible 53%. 53% compared to the old standard, TDM1.
Wait, let's just pause there. 53% better than TDM1. TDM1 was itself, an advanced ADC, the standard of care. So in HER2 isn't just better, it's making its predecessor look obsolete in this setting.
That's exactly it. And that's the commercial dynamite, right? You take a drug that was used later on, and suddenly, based on this data, it becomes the standard in this earlier, higher volume setting. You're talking about potentially tens of thousands of patients a year. It unlocks a whole new multi-billion-dollar market segment just within breast cancer.
Wow. And as if that wasn't enough, there was DESTINY-Breast11 too, reported a 67% PCR rate, pathologic complete response, in the neoadjuvant setting. Why is PCR such a big deal?
Yeah, PCR, pathologic complete response. It basically means after that initial treatment, doctors couldn't find any invasive cancer left in the breast tissue or lymph nodes, getting rated as high as 67% in early-stage HER2 plus breast cancer before surgery. That's really, really promising. It often strongly predicts better long-term survival, maybe even cure for some.
Yeah.
Huge numbers.
Okay, sticking with ADCs, but moving on. Detroit. We're seeing potential beyond HER2 now, right? The tropion breast O2 data in triple-negative breast cancer, TNBC.
Yeah, that was significant too. TNBC is notoriously tough to treat. This trial looked at first-line patients who weren't suitable for the usual immuno-oncology drugs. And Datroway delivered a clinically meaningful 5.0-month improvement in median overall survival compared to standard chemo. 5 months might not sound enormous, but in TNBC first-line, that's a real benefit. Shows the ADC platform has legs beyond just HER2.
And the third piece of the oncology puzzle seems to be moving existing immuno-oncology drugs like Imfinzi earlier, too. A couple of key wins there.
Exactly. The strategy is clear.
Yeah.
Hit the cancer earlier and harder. So with Imfinzi, you had Matterhorn and stomach cancer, specifically resectable gastric and GEJ cancer. Using Imfinzi around the time of surgery cut the risk of death by 22%.
22%. Okay.
And maybe even more compelling, PO-TOMAC. This was a non-muscle invasive bladder cancer. Adding Imfinzi to the standard BCG treatment reduced the risk of the cancer recurring by 32%. It just makes sense, right? Use these powerful tools when the cancer burden is lower. It's better science and better business, too.
Okay, so if oncology is the engine setting these new standards, let's shift to the biopharmaceuticals division, CVRM and RNI. This feels more like a story of replacement, maybe? Swapping out older drugs facing generics for new blockbusters?
That's a perfect way to put it. Yeah, look at CVRM. They're big growers. Farxiga, still strong, up 11% CER. Solid. But you have to weigh that against the massive hit from generics. Prolenta, their big cardiovascular drug, down 33% CER. Biosimilars hit it hard in the US and Europe in Q2. That leaves a big hole.
Ouch. And the drug tapped to fill that hole, and maybe even more, is Baxdrostat, the potential first-in-class ASI aldosterone synthase inhibitor.
Exactly. Baxdrostat is probably their single biggest new hope in the CVRM pipeline. It's aimed squarely at uncontrolled and resistant hypertension. Patients whose blood pressure is still high despite being on multiple drugs. The company itself is talking about a peak year revenue opportunity of over $5 billion. Billion with a B.
5 billion, and that's based on the Baxdrostat phase 3 data. Can you break down that blood pressure reduction? What does 9.8 millimillimeter Hg really mean for these patients?
Right, so the trial showed a 9.8 millimillimeter Hg reduction in systolic blood pressure compared to placebo at the 2 milligram dose after 12 weeks. Now, for a typical patient, almost 10 points is really good. But for these patients, the resistant ones who are already on 3, maybe 4 drugs and still not controlled, getting an extra 9.8 millimillimeter Hg drop is highly significant. Clinically meaningful. It could genuinely lower their risk of stroke, heart failure, kidney failure, death. That's why the potential is so massive. It works where other things aren't cutting it.
Makes sense. Okay, let's swing over to the other part of biopharma, respiratory and immunology, RNI. You said earlier it was accelerating, driven by biologics.
Yeah, this segment is really about the newer stuff, the next-gen products. You see fantastic growth from biologics like Tezspire that once surged 63% CER.
63.
Yeah, and Fasenra, also strong, up 19% CER. And then in COPD, you've got the triple therapies and one inhaler, the FDCs. Their drug Breztri is noted as the fastest-growing one in the expanding class, up 26% CER.
And RNI also had some news for lupus patients, right, with Safnello.
That's right. Safnello grew nicely, too, 47% CER. The news was the TULIP SC data. Basically, it supports giving the drug as a subcutaneous injection, like under the skin, that patients can potentially do themselves at home. For someone managing a chronic, complex condition like SLE, not having to go into a clinic for infusions, that's a huge convenience factor. Makes a real difference to quality of life, and that drives uptake.
Definitely. Okay, quick touch on rare disease election. The strategy seems pretty clear there. Move patients onto the newer drug.
Precisely. It's the C5 franchise conversion play. Ultomiris, the newer drug, grew 21% CER. It's steadily pulling patients away from the older one, Soliris, which was down 28% CER, partly hit by biosimilars too. But they're not just converting, they're adding too. They had positive phase 3 data for Gefurlimab in generalized myasthenia gravis, or GMG, showed rapid sustained benefit.
Yep.
So yeah, replenishing that rare disease pipeline constantly.
Okay, so we've covered the science, the pipeline wins across the board, really. Let's connect this back to the bigger picture. The business strategy, the investments, they seem serious about that $80 billion revenue target for 2030.
Oh, absolutely. You don't get to $80 billion without massive scale-up and protecting those future blockbusters. That's why they're pouring $50 billion into U.S. manufacturing and R&D by 2030, and that includes a huge new $4.5 billion manufacturing plant in Virginia.
Right, and that Virginia plant isn't just for anything, is it? It's quite specific what they plan to make there.
Highly strategic, yeah. It's slated to make the drug substance for some of their most critical future platforms. Firstly, the weight management and metabolic portfolio that includes their oral GLP-1 candidate, plus Baxdrostat for hypertension. And secondly, it's going to make the antibody-drug conjugates, the ADCs, for the oncology portfolio. So they're investing directly in manufacturing the very things expected to drive growth through the next decade.
Which leads us neatly into those U.S. operational shifts, especially that historic agreement with the U.S. government announced back in October 2025. Sounds like a complex deal designed to sort of stabilize things while opening new doors.
That's a good summary.
Hmm.
It really had three key parts, all linked. First was pricing. They agreed to Most Favored Nations, or MFN, pricing for existing drugs in Medicaid.
MFN. So basically, Medicaid gets the lowest price offered anywhere globally.
Pretty much, yeah. And prospective price equalization for new drugs, too. Now, obviously, that puts some pressure on revenue per unit. But, and this is crucial, in exchange, the deal included provisions allowing them direct-to-consumer, DTC, sales for certain chronic disease products directly to eligible patients.
Ah, okay. So, bypassing some of the middlemen, that sounds like a potentially big strategic win to offset the MFN pricing pressure.
It could be a game changer, yeah. Selling direct for select chronic meds, it gives them more control over supply, potentially better net pricing on those specific drugs. It's a really interesting wrinkle.
And the third piece was about trade policy, tariffs.
Right. They secured a 3-year delay on potential Section 232 tariffs. These are the tariffs linked to national security concerns that could hit imported goods hard. Getting that delay buys them crucial time. Time to build up U.S. capacity, like that Virginia plant, and execute their plan to eventually onshore manufacturing for drugs sold in the U.S. It's all about de-risking the supply chain and aiming for more self-sufficiency in their biggest market.
Okay, so pulling it all together for you, the listener, what's the big takeaway? I mean, yes, strong financials for 9M 2025, clearly. But the real story seems to be this wave of genuinely groundbreaking phase 3 data, that 53% risk cut with Enhertu, the nearly 10 millimilli Hg drop with Baxdrostat. These numbers are actually changing how doctors treat major diseases, and that's justifying these huge strategic bets.
Precisely. And if you zoom out, the whole strategy hinges on replacing older therapies with these more complex targeted platforms, ADCs, maybe future gene therapies, these new metabolic drugs. So given everything we've discussed, this unprecedented pipeline delivery, the massive manufacturing investments focusing on things like oral GLP-1s and ADCs, it raises a really interesting question for you to think about. We see oncology transforming rapidly right now, but looking ahead, what's the next major disease area that might see a similar, complete, rapid overhaul in the next 5 years, driven by the kind of targeted platforms this company and others are pouring billions into? That feels like the next deep dive waiting to happen.